How do I calculate my capital gains tax? Let's check out an example today. Hi, I'm Kimberly Shapcott, qualified chartered accountant, property investor and entrepreneur. Let's sit down and have a chat. One question I get asked regularly is how much capital gains tax am I going to have to pay? Now this can be quite a significant amount of money depending on the gain that you have made. So today we're going to dive into an actual capital gains tax calculation and I'm going to show you how it fits together. So let's jump into a traditional capital gains tax calculation to give you an idea of how the gain is worked out and what tax you will actually have to pay on that gain.
So let's say Annabelle bought a house for £150,000 and sold it for £200,000. Now, as you can see, we've got my nice little house to get us going and our purchase price of £150,000 and our sales price of £200,000, which inevitably means that she has made a profit of £50,000. However, she probably doesn't have to pay tax on the whole £50,000 because this is not her true net profit. She'll probably have racked up some costs when she sold the property, such as solicitor fees, estate agents, fees, advertising. So we're going to see what we can claim there. And the first of these is going to be our selling costs, which we're going to put in our calculation of £2,500, and we're then going to put her buying costs in at £2,500 as well. Now these will be stamp duty, surveys, solicitors' fees. And during the time that she owned the property, she's also done some work on it, which has come to the value of £10,000. Now, these have not been declared on tax returns, and that is quite a crucial point that we need to make, that this refurb is refurbishment. It's things like the roof, it's things like other bits that you've done, like garden renovations. Now, let's look at the capital gains tax calculation and how it's calculated based on that. So the first thing we're going to look at is our sales proceeds, which is at £200,000. We're then going to take off the purchase price of the property, which is on at £150,000. As we've already mentioned, we can take off our selling costs, which are things like our estate agent and solicitors' fees and any other ad hoc fees that we've had to pay to sell the property of £2,500. And then from when we first purchased the property, we have our solicitors' fees, maybe our stamp duty, and this again is going to be the £2,500. Now, as we mentioned, we've done some improvements to the property and our refurb costs are going to be in at £10,000. So our overall net gain that we are going to have to look at is £35,000. Now, the net gain is after deducting all of the allowable costs and is known as our chargeable gain. Now, the other thing we can take off is going to be our personal allowance, which for the tax year 2023-2024 will be £6,000. This means that our total taxable gain is going to be the sum total of £29,000, which will be taxed at the appropriate tax rate. The final piece of the puzzle is therefore what tax rates we're going to have to be paying. So here you can see the high rates of tax at 28 or 20%, and then we're just moving down and the basic rate tax rate of 10%, 18%, 20 or 28.
As you can see, it's not the most complex of calculations, but you just need to know your numbers and know what you can claim and what you cannot be including in your calculation. Hopefully today you've discovered how you go about calculating your capital gains tax when you dispose of a property. If you have any questions, then please do leave a comment. Please like the video and do subscribe to the channel, and let's make tax less taxing. less tax